And lastly, what's your view on the equity market from a 1 to 3 year horizons?
See, at the end of the day, the equity market is moved only by three factors in the medium to longer term. The first is fundamental, both macro and corporate. The second is liquidity, both domestic and foreign. And lastly, valuation. So far as the macro fundamentals are concerned, if you look at India's GDP growth or other high frequency macro data starting from industrial production, the cargo transport, GST collection, EOA bills, electricity consumption, two-wheeler sales, four-wheeler sales, what you will see with few exceptions, most of the macro parameters of India, at least till now, is in a good shape. And as I also said that according to IMF forecast, India will be the fastest growing major economy in the world between 2022 to 27. So macro fundamentals of India are strong. So far as the corporate earnings are concerned, once again the corporate earnings remain extremely robust, and if anything, the corporate sector is doing better than the overall economy. 40% plus earnings growth so far in the last 12 months, which is one of the best clocked by the country. And even if you look at sector level, with the exception of oil and gas and healthcare, all other sectors in the last 12 months has clocked earnings growth in excess of 12%. So therefore, in terms of the corporate fundamentals also, we think we are in a strong footing. So far as the domestic liquidity is concerned, huge amount of money from domestic sources are coming into the equity market. The share of equity as a percentage of overall savings of the households has gone up from 1.3% in the 2000s to about 5.3% in the current decade. So in India, the equity culture is getting built up, and major part of the equity investment is now going through the mutual funds. The ownership of mutual fund in free float market cap has jumped from 9% in 2014 to more than 17% now. If you look at the number of equity demat accounts have jumped from 6 crore in 2016 to about 9 crore now. The amount of monthly SIP amount to mutual funds has jumped from about 3.2 or 3,200 crore to about 12,700 crore per month over the last 4-5 years. So clearly, a lot of the domestic liquidity towards the equity market is looking good. It's the foreign liquidity which was in the tailspin, because in 2022 we have seen large amount of outflow on account of foreign portfolio investment. Though from late July until August we saw these flows coming back. Once again in the recent past the outflow has started, so that becomes the risk factor, and that's basically the reason why you haven't seen a new high despite strong macro fundamental, despite strong corporate fundamental, despite strong domestic liquidity. This is the reason why you haven't seen a new high in Nifty after 18th October 2021. So roughly speaking, over the last 340 days, you haven't seen a new high, and the market currently remains about 9% below the all-time high. Typically, whenever you have seen an outflow of FI money, in the next 12 months, the money comes back in a great way. We have seen it after 2008, we have seen it after 2011, we have seen it after 2018. These are the 3 years when FI flows had gone out. On an average, in the next couple of years, each year about $40 billion comes back. So from that perspective, also we can hope that FI flows also will become positive in the next 12 months. Lastly, valuation. Today, Nifty is trading at about 20 1 year backward PE, that is trailing 12 month earnings. This is actually the average from 1999, and this is significantly lower than the average of 26.5 PE from 2015 to 2021. So in that sense, if not extremely cheap, Indian equities are not expensive. So on all three parameters, fundamental, liquidity as well as valuation, Indian equities are looking attractive. Having said that, it's never possible in an interconnected world that Indian market will go up while the world market is going down. So we don't expect that to happen, but as and when the clarity emerges about the future outlook, whenever market makes a bottom and market starts turning around, we think the rally in India will be much bigger than most other countries. So yes, while we maintain a cautious stance on equities in the very near term, from a medium to longer term perspective, we remain pretty positive on Indian equity market.